by my colleagues from HMRC, who I'll introduce shortly, who are going to do the bulk of today's presentation. We will be recording the session, and we will also be sharing the slides after today's session. Hopefully presentations will last about half an hour, and then there will be some time for questions, and anything we can't answer, we'll take that offline and obviously get back to you afterwards. So please, any questions throughout the presentation, if you can post them in the Q&A box at the bottom of your screen, and we'll take as many of those as we can at the end. So we are running these sessions fortnightly, so welcome back to those who have joined us. To those who are new, we are Greater Manchester Chamber of Commerce. We are a membership organisation offering lots of business support to our clients and also non-members, and obviously a big part of that is international trade services. So we support exporters, importers, and also companies looking to do business in the UK. These are all our services. There's quite a lot there, so we can take companies all the way through from the start of their export or import journey, all the way through to paperwork, delivering your goods, and we also now support with customs declarations. And obviously we're going to talk about importing and VAT implications in today's session. So we're just, if you've joined us before on these, we're just asking a question to start with about your experience of international trade. So if I can ask my colleague to just launch that for us now, and we'll just give you a few minutes. And can you give us the results, Pauline? Thank you. So we've got 60% experienced exporters on the call, 20% occasional, and 20% that isn't applicable. So I'm now just going to reshare my screen and hand over to Anthony Allgood from HMRC, who's going to do today's presentation. So over to you, Anthony.
Yes, thank you very much indeed. Good afternoon, ladies and gentlemen. Thank you for tuning in today. I'm going to be looking at VAT changes on the importation of goods into GB and how that's being affected after the EU transition period. My particular specialism is in postponed VAT accounting, and so my knowledge of matters customs, etc. is limited, which is why the first couple of slides that we're going to present to you will give you a little bit of background on the customs side of things before I get in plunge into import VAT and the use of postponed VAT accounting more explicitly. Can we have the next slide, please? So really basic introduction to the system, and I'm sure most of you will be acutely aware of the fact that from the 1st of January 2021, new import requirements have been input into place in relation to goods moving from the EU into the UK, specifically into GB and into Northern Ireland from the rest of the world. And we currently have a transitional system in place called the staged approach to customs control for the first year of that period, which will end in January 2022. It means that all goods entering into the UK from around the world, now including the EU, including excise goods, will require a customs declaration and the use of all standard customs procedures when they arrive in the in the United Kingdom or in Great Britain, as it says on the slide. But we're not currently requiring safety and security ENS declarations, and there are limited controls in place in relation to border areas where there are no existing customs control in order to maximize flow and allow people to bring goods in with minimum of delays. Next slide, please. So just a little bit of background in terms of where pre-lodged declarations are going to be required, and the a little bit about the staged approach to customs controls in relation to non-controlled goods and making entry into declarant's records for the period of staged approach to customs control, in which you are given 175 days, or roughly 6 months, to submit the supplementary declaration relating to the entry that has been made into your own records for those those goods. Control goods, e.g. excise goods, still need to make a frontier declaration, and that can be a full or a simplified declaration depending on the level of trader's authorization. So if you have an authorization for CFSP or EIDR, then you can use the simplified declaration. Otherwise, you will need to be making full declarations. I understand there's another poll coming up now.
Yeah, so I'll just share it now, so you should all be able to see it. So it's just a question about what have you considered in terms of customs with the European Union. So we'll just give you a few seconds to answer, please. You should see on your screen, and then we'll share the results and we'll go back to the presentation. Okay, so I think I'll stop it now. So we can see the results. 60% of the delegates today are using a customs agent, 10% and are doing it themselves or undecided. So obviously, hopefully this presentation will give you some more information about this. Okay, back to you now.
Great, thank you for that. That's actually really helpful information, because it gives me a small idea of where people who are attending the group are in their journey. So again, a little bit more background in relation to imports and acquisitions. This slide essentially tells everybody that movement of goods into GB from the EU are no longer acquisitions. So if we're familiar with the system of acquisition tax, which existed before the end of the transition period, then that is no longer extant for any goods except those moving from the EU into Northern Ireland under the Northern Ireland Protocol. On the basis of the fact that we no longer have acquisitions in that sense, a new system was put into place called Postponed VAT Accounting, which is available to all UK VAT registered traders importing goods into Great Britain from anywhere outside the UK, or importing goods into Northern Ireland from outside the UK or EU. The basic premise of postponed VAT accounting is to allow importers to account for and recover import VAT on the same VAT return, and it is a permanent fixture. I will be going a little later on in the presentation into how this works in relation to staged approach to customs control, but even when staged approach to customs controls have been lifted on the 1st of January 2022, postponed VAT accounting will remain an option to all importers. It doesn't replace the other means of paying import VAT. So if you are currently using a deferment account or paying your import VAT upfront, then C79s will continue to be distributed, and existing processes can use those, existing importers using those processes can continue to use them. Non-VAT registered traders will continue to need to pay import VAT when they make their customs declaration or have that customs declaration made on their behalf. So things will not change from them. Different rules do apply to goods in consignments valued at £135 or less, and my colleague Ed will be covering that information a little later on in the presentation. Next slide, please. So, postponed VAT accounting is available to you as we speak. In most cases, for goods moving being imported into Great Britain or Northern Ireland from outside the EU, and into Great Britain from anywhere in the world, and into Northern Ireland from anywhere in the world except the EU, you are entitled to use postponed VAT accounting from the 1st of January. So it's available now. It's not something you need to enroll into. You simply have to fill in your customs declaration notifying the fact that you wish to use postponed VAT accounting. If you do use postponed VAT, and we'll come into the mechanics of how that works a little bit later, when you do use postponed VAT accounting, you do not pay any VAT at the point of import. Instead, you account for and recover the import VAT as input tax on the same VAT return as relates to the date in which you imported the goods. Obviously, these things are subject to normal rules on input tax deduction. So if you're partially exempt or you have some non-business use of those goods, then the normal VAT rules do apply. Next slide, please. So, using postponed VAT accounting, it's selected on the customs declaration. So when you complete your C88 or the SAD, then the trader's EORI or in chief will be placed in box 8 of the customs declaration, and method of payment code G will be selected in box 47E, which tells chief that you will be using postponed VAT accounting to account for your VAT, and the VAT will not be charged to your deferment account or a charge raised to you to pay that VAT. If you're currently using CDS or are due to be using CDS in the relatively near future, then you put your VAT registration number into data entry point 340 of that declaration, and that again tells the system that you wish to use postponed VAT accounting. In the same way as if you use any other method of payment code, a C79 is generated. If you use PVA, then an online monthly statement is generated, which the trader will need to access, or which you will need to access and download, and it will contain the information you need to complete your VAT return. As I said earlier, you don't need to be authorized to use PVA, so you don't have to tell HMRC that you're going to be using PVA or ask our permission to do so, but you will need to subscribe to the financial dashboard. You'll have to subscribe to CDS, looking at the financial dashboard to access your monthly postponed VAT statement, and we recommend that you do that as quickly as you can, so that if there are any delays in your registration, they can be dealt with before you begin to look at your VAT statements. In line with all existing VAT rules, as I said a little earlier, using PVA must relate to goods that are going to be used in the line of the trader's business, and so PVA cannot be used if your goods are being imported for a non-business purpose. And for non-established taxable persons, I'm not anticipating there are many on the call, but to cover it for completeness, they are entitled to use postponed VAT accounting so long as they have a UK VAT registration number and UK EORI. But as you're probably aware, they cannot in their own right make customs declarations, and so they do need to instruct an agent to make those customs declarations on their behalf. Next slide, please. Right, PVA can be used when imported goods are removed from into free circulation from a customs special procedure. So just to unpack that a little bit, when goods are imported into the UK, they don't automatically necessarily go straight into the UK economy. They may be held in temporary storage, or there may be some other reason why the customs duty and the import VAT is suspended while the goods are in the UK, such as temporary admission. However, when those goods are removed from that special procedure, a further declaration is required, and it is on that declaration that method of payment code G should be used to bring the import VAT into account. PVA can be used for imported excise goods when they are released for home consumption. And so once they've been placed into an excise warehouse and then the relevant paperwork is completed to remove them from that excise warehouse, then PVA should be available on that warrant or that paperwork. As I said earlier on, the use of PVA is normally optional and depends entirely on a declaration by declaration basis. So you can choose to use PVA on one declaration, but not on the next one. However, if you are using the staged approach to customs control, which is explained a little bit more there in terms of importing non-controlled goods from GB, from the EU into GB during this year, and have used the delayed customs declaration or using a simplified customs declaration, then you must use postponed VAT accounting for reasons I shall come on to in a little bit. Next slide, please. As was the case with the majority of the people who completed poll 2, it's important that if you wish to use postponed VAT accounting, your customs agent knows that, because the customs agent will be the person who's actually completing the paperwork and will need to know how you wish to account for the import VAT. They do not hold the prerogative to use PVA on your behalf for obvious reasons, in terms of you not necessarily knowing you're going to get a monthly postponed input VAT statement, or you may not have wanted to use postponed VAT accounting, or vice versa. So communicate on this slide, communication is absolutely key. It's important that everybody in the supply chain, from the in relation to the intermediary and the owner of the goods, knows which type of system is required for accounting for import VAT. I should also add at this point that once a method of payment code has been selected, it cannot be changed. So if you do wish to use PVA, then you should tell your agent as quickly as possible and make sure they acknowledge that they are going to be using PVA on your behalf, in order to avoid any confusion or problems further down the line. Next slide, please. Just to go back to the point about business, non-business, HMRC accept that there are times when goods are being imported into the UK when it's not entirely clear at the point of import whether or not they're going to be used for business or non-business purposes. PVA is available for those goods where either they will definitely be for business purposes, or you are not completely sure of what your purpose is going to be when you use them. The use of those goods will be when they enter the UK. You are not able to use PVA to account for import VAT on goods which you know will be used solely for a non-business purpose. In those situations, you should either complete your customs declaration or instruct your agent to complete the customs declaration using either immediate payment or a duty deferment account. Next slide, please. So you've completed your customs declaration to use postponed VAT accounting, and you've then received your monthly postponed input VAT statement, which you've downloaded from CDS. And here is where you should deal with how those entries should be made on your VAT return. Box 1 should include the VAT due on the imports. Box 4 should include your import VAT which you're reclaiming as input tax, subject to partial exemption or other restrictions you may have. And in box 7, you should include the total amount, net amount of the imports. Normal rules apply about when VAT can be reclaimed. And if you are going back to the point I made a little earlier on about the staged approach to customs declarations, when you import goods into the UK, a tax point is created for that import VAT. So, for example, if you have imported goods on the 1st of March 2021, then despite the fact that the supplementary declaration may not be submitted until the 1st of September 2021, you need to make an estimate of how much import VAT was due on the 1st of March and use that estimate to complete the VAT return covering the 1st of March with that estimate. The estimate doesn't have to be 100% accurate, hence the word estimate, because you won't necessarily know the correct amount of import VAT. But so long as a reasonable effort has been made to estimate that import VAT and account for it on the VAT return, then HMRC will be content to allow you to delay your declaration, which will create, when that declaration is submitted, it will create the monthly postponed input VAT statement and give you an accurate figure. So when you get your September statement or October statement, depending on when you submit your declaration, you will be given the correct amount, and then you can make an adjustment of the estimate on the VAT return covering that date. So 1st of September, for example, and thus the situation is regularized. What we cannot allow is for the goods to arrive in March, but there'll be no import VAT accounted for until September. So some estimate has to be made in March, but we can wait till September before the correct amount is placed on the next VAT return. Next slide, please. As I alluded to earlier on, although you don't need to be authorized to use postponed VAT accounting, the equivalent of the C79, which many of you will be currently using in relation, or before the 1st of January would have been using to account for your import VAT, will now not be sent to you by post. It will need to be downloaded from the financial dashboard section of CDS. You should view it and download it because it will only be available for 6 months following its production. So after that, you will need to approach HMRC if you do not have or cannot access that statement, and we will have to go back into the archives and dig it out for you. But if you can view and download your monthly statements as they come up, then you will be in a position to keep a record of those and use that as your proof that you are accounting for import VAT as output tax and reclaiming it where appropriate as input tax. That final bullet indicates that each member of any VAT groups that import goods will have their own EORI and will have to sign up to CDS in their own right. We only have capacity to give access per EORI rather than per VAT group. The members of any VAT group should download their own VAT statements and forward them to the representative group member to complete the group VAT return. Next slide, please. Right, okay, that concludes my presentation, and I'm happy to hand over to Ed Brett, my colleague.
Hi everyone, thanks Anthony. Hi there everyone. Yeah, I'm going to talk to you briefly, the last couple of slides today, about importing goods below the value of £135. So from 1st of January 2021, overseas goods sold in consignments valued up to £135 to UK customers are now subject to UK VAT at the point of sale rather than at the point of importation. The £135 limit applies to the total value of the consignment, not the individual items within it. So, for example, if the consignment contained 3 items valued at £50 each, they would not fall into this this VAT change because the total value in this case would be £150. So that's there. In addition to that, a low value consignment relief, which relieved import VAT on consignments sent from outside the UK and outside the EU, up to the value of £15 has been removed. What this means is that UK VAT is now due on all goods imported into the UK, but for these goods up to £135, which aligns with the customs duty threshold, there is no VAT to be paid at the border, and that it is paid via a UK VAT return. I'm just going to touch upon 2 types of sales which are affected by this, so business to consumer and business to business sales. So overseas sellers selling directly to UK customers should now charge UK VAT at the point of sale. This means they will need to register for VAT in the UK and account for that on their UK VAT return. A big change here, which is sort of a large change for the affected sellers, is where an online marketplace facilitates that sale. The online marketplace is now responsible for charging, registering, and accounting for VAT instead of the seller. So if a seller sells via an online marketplace exclusively, they will have for the goods below £135, they have no VAT liability for those. It will be the marketplace that must register and account for the VAT on those sales. Business to business sales are also captured by these changes. But where a UK VAT registered business provides the seller or online marketplace their VAT number, the VAT won't be charged at the point of sale. Instead, the business can account for VAT on their VAT return for reverse charge for imports into Great Britain, or they have the option of using postponed VAT accounting, which Anthony took us through earlier, for imports into Northern Ireland. Would say though that if a VAT number is not provided, then the rules are that the seller or online marketplace must treat that as a B2C sale and therefore charge VAT accordingly. These rules don't apply to consignments that contain excise goods or non-commercial items such as gifts. These goods remain subject to rules and consignments of goods valued over £135 where import VAT still is due at the border. If you could just move on to the next slide. Thank you. So overseas sellers who sell goods located in the UK at the point of sale and directly to UK customers should charge VAT at the point of sale. They will need to register for VAT in the UK with HMRC and account for that on their VAT return. Where an online marketplace facilitates that sale, they are responsible for registering accounting for the VAT instead of the overseas seller. And there's no limit on that. There's no £135 limit on that. So for any sales facilitated through an online marketplace for an overseas seller with goods in the UK, there's no threshold for that. The two exceptions where the seller does remain responsible for the VAT: sales to VAT registered businesses who provide its VAT registration number, which I've touched upon briefly already, and then goods located in Northern Ireland sold to a customer in Northern Ireland by a seller established in the EU. So two quite different things there. So like I say, these rules apply irrespective of the value of the goods consignment, and they also apply to excise goods in this instance. The last two slides are just some links for gov.uk to where you can find out a bit more information around postponed VAT accounting and these changes on low value goods. I believe Amy is going to circulate the slides after this webinar, so we won't flash those up for you and let you you can access them later. That concludes my part of the presentation. I will just pass you back to Amy and team. Thank you.
Thanks very much, Ed. And I think we're just going to go into our final poll now, which is just around how you found trading since the 1st of January. Thank you very much to Ed and to Anthony for joining us. I think that's really informative. I know we've been getting a lot of questions on this, so hopefully that's helped you out. If you still have outstanding questions or anything you want to ask, if you want to, while everyone's just filling in the poll, please just share those in the Q&A and we'll put them to Ed and Anthony shortly. I can already see we've got a couple in there.
Okay, so the poll is live. As Amy said, we just want to know how you found the movement of goods since the 1st of January 2021. We're not getting any more answers, so I'm just going to end the poll now. And the result is 38% moderately difficult. So the majority found it difficult, 13% moderately easy, and 25% not applicable. So thank you for sharing. I'm just going to stop sharing the results now.
Thank you very much, Pauline. And just putting up there our upcoming events. Obviously, as mentioned, we will share this with you. There are upcoming training courses and an event on Portugal we have coming up in September. We have one last masterclass in July, and then we're going to take a short break and then resume in September. So next one will be on trading globally, overseas debt, and then we've got something on REACH, the chemical restriction regulation, and CE marking coming up in September. So obviously we'll share those links with you if you want to attend any. And sorry to give you a final poll today. We're just trying to get a bit of feedback about how these events are going to look going forward, whether we want to resume to physical events or to virtual events. So we're just going to launch our final poll just to get a bit of feedback about how everyone's feeling and what everyone wants our event program to look like going forward as we're in the planning.
Sorry, Amy, this one is not here.
It's not what? Oh, okay, no worries. We'll give that a miss for today, and we'll go straight into our Q&A. So if I stop sharing my screen and we have a look at the questions, I think Anthony's already answering one in the Q&A box from Isabel. We have somebody who is anonymous but has posted a question. If there is an entry on the PVA statement that we are unsure what it relates to, how do we get further information?
It's a very good question to which I don't have an immediate answer. If you don't mind, I will take that one away and come back to you guys in Manchester with a response. There are several different options available, and I'm not sure which one to recommend first up, if that's okay.
Yeah, that'd be great. Thanks, Anthony, because I know we've had a few questions coming in from clients on that, where the forwarder is obviously an agent's postponing the VAT, and then they're not able to match the entries up to what they've got on the record. So that'd be really useful. Any more questions?
Maybe it would be interesting to share one of the answers that Anthony's given already. So we had a question about how to adjust the estimates on the VAT return in case of delayed import declaration. So I'm just going to read your answer, Anthony, which was that the correct amount of VAT will appear on the relevant VAT statement. You should keep a record of your estimate and compare that to the relevant amount. Then simply place any difference on the boxes on the VAT return. So long as you can show an audit trail, HMRC will accept it. So thank you for answering the questions, Anthony. And I know there's one that you're already typing the answer to.
Yeah, it is, but it's in response to a specific issue that a trader has where kind of relates to the point I made earlier on about communication. The trader has used agents for a couple of imports, and they haven't used the right method of payment code for some reason. My response that I was just typing was that I'm afraid the first port of call on that is to ask the agent what they did, because the import VAT will have been accounted for by somebody for the goods to have appeared, for the entries rather to have appeared on a C79. HMRC will be expecting to see the VAT from a deferment account somewhere. So I'm sorry, Isabel, you have to go back to DHL and Parcel Force to check what they have done with the relevant import VAT.
Thanks, Anthony. Is there an end date to PVA?
No, it's a permanent arrangement. PVA, the only relevant date to think about at the moment is the fact that as of the end of December, it would become optional for all declarations. So whilst we have the mandation in place at the moment for delayed declarations, once that comes to an end, postponed VAT accounting is optional for the foreseeable future.
Great, thank you. I know that's a question we've had as well. I don't think anything else I've missed, Pauline.
No, I don't think so.
Isabel, okay. I know we are seeing that issue with a few of the past parcel operators where they're not, some feedback we've received from some of the clients is that they've not postponed the VAT when they wish to, and then they've got a bill through. So it might just be worth checking if you can. And obviously we'll get back to people that are receiving statements and they're unsure what it relates to on that question, because I know that's a big issue at the minute. If you have decided to delay your declarations and that 175-day time limit is coming to an end, please do get in touch. We do still have some capacity at the chamber if you're looking for assistance with your import declarations, if you're looking for us to talk you through how to postpone the VAT. Myself and Pauline will be happy to help out, so please do get in touch. And I think that's everything from me. So if we've got no more questions, then thank you everyone for joining us. We'll see you again in 2 weeks' time for our session on overseas debt and collection. And thank you very much to Anthony and Ed for joining us today. Any more questions, please get in touch via email. We'll send a follow-up with the recording and you can get in touch with us via that. But thanks, Anthony and Ed. Great session, and we'll see you all again in 2 weeks' time.
Thank you.